Hello and welcome to another update video about SEI. SEI did hold the communicated support level here at 68 cents. Yes, a wick below the level, but it didn't break it and sustained below it, which means that both scenarios are still valid here. Yeah, and we talk about what these are in case you missed previous videos. First of all, looking at the bigger picture for SEI, we are still dealing here with a situation in which the market has produced either an A, B, C structure, and the C wave is a 5-wave move, 1, 2, 3, 4, 5, or it's a 5-wave move that's in the making. There's no way of knowing the difference at this stage. It's either it's holding a higher low after the next high or not, okay? But in the white count, which I'm going to follow, until it breaks, we're dealing here with a 1, a 2, a 3, a 4, and a 5. And in both scenarios, we would like to see another high. So that makes it sort of easy at the moment. The support levels are also clear. So I highlighted to you that as long as the orange support area here is holding with support at 44 cents, I remain focused on higher. That's, I think, a very clear message. Ideally, we are not even breaking below 52 cents. Okay, so all of that, I think, very clear statement. But now, in the very short term, it gets a bit messy. And the question is, okay, what is it? I probably should change the color of this one. Let me just do that. Otherwise, it may be confusing. Yeah, I just want to share here. So basically, the idea is that obviously white and yellow, we won't be able to tell the difference until we've made another high, possibly in the region around. Yeah, I mean, we're dealing here with $1.06, $1.16, $1.26. They are all some levels to watch as we go higher. They will, to a degree, depend on the micro count that's in control here, and that's what we need to work out. But it's tricky. So looking at the micro count, it is possible that this fourth wave here in yellow, bottomed here. If the fourth wave bottomed on the 8th of January at basically 59 cents, then the move up can only be an ending diagonal. I don't believe that really. Okay, not with the deep pullback we've had today. So in this scenario, this was a wave 1. Okay, A, B, C in a wave 1 of 5. We had a wave 2 pullback. Then probably here wave A, wave B, very deep, and wave C of 3. What I don't like about this is this deep pullback here, but it never went below the low of the wave 2. So it's absolutely valid. Then a wave 4, then a wave 5. Okay, so that's sort of the ending diagonal scenario. Honestly, to keep this scenario alive, the price really needs to stay above today's low. And that was at 65 cents, 65.5. Any break below that will likely lead to invalidation of this orange subdivision, which is basically the ending diagonal. And in this scenario here, I just share it with you. This here would have been the A wave, a B wave pullback, and the C wave would still follow in orange then, of wave 3. But this B wave is far too low, okay? So, I mean, not to be valid, but to be reliable. Came very, very deep. So, okay, so what does that mean then? That means, I mean, it could be that, but it would literally need to turn around now and rally to, 93 cents at least, okay? That's the orange subdivision, which is basically just assuming that wave 4 already bottomed. However, it is also possible that the wave 4 is still unfolding and that we're dealing here with an A wave and a B wave and a C wave. I start to prefer that count. Honestly, I start to prefer it. And the reason I prefer it is that really it just looks better in terms of proportions. But ideally in this scenario, I'd like to see, well, at least get the price to round about 58, 59 cents. So that this C wave there goes just a little bit lower. But both are possible. I mean, we're already low enough, to say that, okay, maybe even yellow wave C. I mean, it's always possible that the C wave ends above A, especially if the B wave here was quite aggressive. So they are just the two potentials we're dealing with. I mean, then you need to think about, okay, what does that mean from a tactical point of view? It's very simple. You know, we have two bullish scenarios. Basically, if we have two bullish scenarios and very clear parameters as support levels, pullbacks can be opportunities to look for entries. And yeah, in both scenarios, the price should exceed $1 ideally in the next wave to the upside. So if the price breaks below today's low, it's more clearly the yellow count because our orange will be invalidated. But if it turns around right now and rallies impulsively, I might follow the orange count primarily. It's a little bit difficult to say because it's literally just down here at a key, potential turning point. But as you can see, it's not doing much. This would be an ideal spot for it to turn around. But at the very least, I'd like it to break above 73 cents to at least indicate that some kind of a low has formed. Yeah, that's my update about SEI. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.